guys, what's up? In today's video we are looking at some goods or stock accounts. First we are going to look at the keywords, accounting terms that are used in these accounts. And then we will look at some transactions and their ledger accounts. Alright, so let's get started. First thing is, what is goods or stocks? Goods or stocks are the things that you buy for selling purpose. Alright, you are only buying it so that you can sell it to your customers. That's your goods or stocks. Stock is basically a bulk of goods that you have saved in your warehouse or shop. Next comes purchases. Alright, so in accounting, whenever there comes purchases, you know they are talking about goods. It's very common that they will just give you purchases for $500 on credit. Now you don't know purchased what? What are we actually purchasing? Well, when there is only purchase written, you should know they are talking about goods. So you will only write purchases. Alright? But if they have mentioned something extra, let's say they mentioned purchased laptop. Now that laptop is not goods. They are not for selling purpose. They are for using it in your office or shop. So purchases. Whenever there is written purchases only, you should know that it means goods. They have bought some goods or stock, right? Goods are those things that you buy for selling purpose. It's your business activity. You are going to purchase it and then sell it to your customers. Next is sales. Sales is similar thing, only difference is that you are selling over here. You are selling goods. In purchases, you were purchasing goods, you were buying goods. Over here, you are selling goods. Alright? So if there's only sales written, then you know this means goods. Next term is purchase returns or returns outward. Sometimes it could happen that the stock you got is damaged, or is not what you expected, or is having some quality issues. Due to any such reason, you might be returning those purchases. So those are written as purchase returns or return outwards. Outwards as in it's going out of your business. Alright? If it was coming in your business, then you will say inwards. In that case, it's sales return. Alright? Outward, inward. Something is coming into your business, someone is returning something into your business, so returns inward, which only happens in the scenario of sales. Purchase returns or returns outward, which means you have bought something, but now you are returning it to the supplier. You are saying, hey, this is not what I wanted. So you are taking it out of your business. So returns outward. Sales return is the same thing. There could be any reason that your customer did not like their purchase and they might tell you, hey, I want to return it. Yes, of course, you might have some formality or policies, but that's not your concern when it comes to accounting. So over here you are just writing, okay, so sale was returned. Now let's write that. That's your accounting terms. Now we are looking at some of the transactions. First is purchase of goods on credit. On 1 August 2018, goods costing $165 are bought on credit from D. Henry. We bought goods that were costing $165 on credit. Do you remember what credit is? If you don't, make sure to watch the previous videos. We have also done how to recognize debit credit, how to make ledger accounts, and even how to make journal entries. So you will get all the links in the description box. Go check it. Anyways, so yeah, on credit from D. Henry. Now, over here, what's happening? We bought goods. Goods were our destination. So we are going to write purchases. As I said, whenever purchases is written, you know this means we bought goods. Alright? So purchases, and then the next account is D. Henry or D. Henry payable. You can write anything. A lot of time you can exchange some terms and that's perfectly fine. We have a lot of synonyms, so that's okay. Alright? But you should know how to write it. Your how is important. Recognizing debit credit, recognizing what's the format and everything is very, very important. Alright, so journal entries would go somehow like this. purchases debit 165, D Henry credit 165, and the description would be bought goods from D Henry on credit. Easy peasy, right? Now let's look at the ledger posting. See? Easy, simple. If you want to know how to do them, link will be in the description box. I'm not going through those because we have given long explanation in the previous videos. They are actually very long and in detail. So you will get a lot from those videos. Do check them. Let's look at the next transaction, purchase of stock for cash. Over here, there's only one difference. Actually two. Amount and cash. In previous transaction, we were buying it on credit. Over here, we are buying it on cash. We are actually paying them. We are not saying, hey, I'll pay you later. No, we are saying, give us the purchases and take the cash. Easy peasy, right? Same transaction, pretty much similar ledger accounts. Nothing is different. The only things that are different are credit has replaced cash and the amount has been changed. Alright, now next transaction, sales of stock on credit. Of course, sometimes you make purchases on credit. Sometimes you make sales on credit. Let's look at it. On 3rd August 2018, goods were sold on credit for $375 to JLE. What's the destination? Destination is JLE or JLE receivable. So JLE receivable, and then our source is sales. We sold something, right? Just like purchases, if only sales is written, you know that they sold some goods. Alright, so here are the ledger accounts. JLE August 3 sales 375. Ledger account and then sales August 3 JLE 375. Another ledger account. Now let's look at the next transaction. Sales of stock for cash. Just like the purchase entries, we have replaced credit with cash over here. And of course, the amount is different. But everything else is same. So instead of JLE receivable on debit or just JLE on debit, we will put cash on debit and sales on credit. Alright, here are the ledger accounts. Let's look at the next transaction. Sales returns or returns inward. FLO actually returned our sales. Over here, our destination, what is coming back to us? It's sales return. Alright, you will write a separate account for sales return. There are two things. It's very less likely that you will be reselling those goods. Right? That's not okay. That's not ethical. And second thing is that you want to know how many returns were done within this month, within this year, and what were the reasons and what happened. So for all that, you have to create a separate account. So what will you do? You will go sales return, debit, and FLO, credit. And here are the ledger posting. Simple, easy. Ledger posting is super simple, I think. And if you don't know, seriously guys, I'm saying it a lot of times, but previous videos are really good regarding these topics. If it was on cash, you will just write returns inward and cash. Alright, simple. Next is purchase returns or return outwards. On 6th August 2018, goods previously bought for 96 are returned by the business to K. Howe. Alright, so we bought these things and now we are returning them. There could be those are damaged or there is some problem, we don't know. The only thing we know that we returned some purchases. Alright, so what did we do? We recorded it. How? K. Howe payable or just K. Howe is our destination. We got that. Alright, we don't have to pay that anymore. So that will be our debit. Next is returns outward. That's our source for K. Howe. Payable or just K. Howe. So returns outward will be our credit. Now it's super simple. K. Howe 96 is our debit. Then returns outward 96 is our credit. Here are the ledger accounts. Easy, right? And yeah, those are the transactions of goods accounts. If you want me to make more videos like this, make sure to let me know in the comments below and give this video a thumbs up. Do subscribe and share, and I will See you guys in my next video. Bye guys!